$50 per week invested in the stock market might not seem like enough to generate anything significant as far as dividend income, but with the power of compounding and consistent, just $50 invested into a high quality ETF, an investor could actually turn this into something quite substantial. Now in this video, we're going to go over two different long-term dividend growth ETFs that any long-term investor should most definitely look into. And also, I'm going to show you the exact math of just $50 invested per week into either one of these ETFs, and show you how over time, as long as you stay invested, this strategy can generate thousands of dollars per month in dividend income. Now stay tuned because we're going to go through all this and more. Right after you please drop a like on this video and subscribe for more future content like this. Now the first high quality dividend growth ETF that I want to use for this example, and specifically one of my favorites, is going to be the SCHD ETF. Now to those that might be a little bit newer when it comes to the SCHD ETF, the Schwab US Dividend Equity ETF's objective is to track as closely as possible, before fees, the total return of the Dow Jones US Dividend 100 Index. Now, the Schwab US Dividend Equity ETF is an exchange-traded fund that is managed and launched by Charles Schwab. This ETF invests in markets of the United States. It invests in stocks of companies operating across energy, material, industrial, consumer discretionary, consumer staples, healthcare, financials, information technology, and even other sectors in that. It invests in growth and value stocks across diversified market capitalizations, and it of course invests in dividend-paying stocks. Now, some really important facts when it comes to this investment vehicle, SCHD, the fund's inception date was October 20th, 2011. So this ETF has been around for a while, and why I find that important is because we have a decent amount of track record to go off of, and even though past performance does not guarantee future performance, it's still nice to have some data to go off. Now SCHD is one of the largest ETFs across the market at almost $49 billion of total net assets. The expense ratio is very cheap at just 0.06%, making it one of the cheapest ETFs to hold long term, which is definitely important, especially as investors get more and more invested as time goes on. Now, as we said, the index name that it tracks is the Dow Jones US Dividend 100 Index, and we're going to go over the holdings in this index in a second here, and I'm going to explain why this is so important. Now, looking a little bit deeper into SCHD, it's currently trading at around $74 per share, which I think for long-term investors could be somewhat of a buying opportunity, considering it's pretty close to being at the middle of the 52-week range at $65.96 and $79.49. Now, SCHD is up 185% over the last 12 or 13 years or so, and this is of course not counting dividends. Now, there's many reasons on why I love the SCHD ETF and why it's slowly becoming one of the largest holdings in my overall 7-figure dividend portfolio. The reason being is that SCHD is heavily diversified, with the holding breakdowns being industrials around 18%, financials 15%, healthcare 15%, consumer defensive 12%, technology at 12%, consumer cyclical at 9%, energy at 9%, communications at 4%, basic material at 2%, and utilities under 1%. Now with an ETF that's this diversified, you don't necessarily have to worry about 1, 2, or 3 stocks performing bad. This ETF consistently has around 100 different holdings in it. And with the top 10 holdings being things like Broadcom, the Home Depot abbvie, Cisco, UPS, Pepsi, Coca-Cola, Amgen, Chevron, and Texas Instruments. These are companies that all have a few things in common. They've been around for a while, they've been paying dividends for a while, and they've all been raising their dividends consistently over time. Which brings me to the next point on why I love this ETF. SCHD has a trailing 12-month dividend yield of 3.51%. And although 3.5% isn't the highest starting yield across the market when it comes to stocks or even ETFs, if you look at the capital appreciation that this ETF has seen over just the past 5 or 10 years, if history were to repeat itself, investors are not only going to be cashing in off the dividend, but also the price of the ETF over time. Now, some more very important metrics to know is that SCHD has a trailing 12-month dividend growth rate of 7.13%. Now, the dividend growth rate is an annualized percentage rate of growth that the particular dividend undergoes compared to a 12-month period before that. So obviously, the higher the dividend growth rate, the better. And SCHD, compared to many other ETFs, has a very, very particularly high dividend growth rate. If you look at over the last 3 years, 12.33%, the last 5 years, 13.92%, and the last 10 years, 11.32%. So even though the most recent trailing 12-month dividend growth rate is only 7.13%, if SCHD does see some massive dividend raises in the next few quarters, the dividend growth rate will once again be above 10% most likely, which means that investors that get in early can expect to get paid more and more quarter by quarter in the future. And speaking of getting paid more and more over time, if you look at SCHD's dividend history payouts since the fund's inception, this ETF was only paying around 12 or 14 cents back in the early days of the ETF. Currently, SCHD is paying around 66 or even 70 cents per share per quarter, which is making the dividend payout around 4 or 5 times as much as it previously paid around 4 or 5 years ago. So now that we went over the SCHD ETF, let's go over another option, another high quality dividend growth ETF that would also work great for this strategy. The dividend growth ETF that I'm talking about is specifically ticker symbol DGRO, or the iShares Core Dividend Growth ETF. Now this ETF is a fund that was launched by BlackRock. It invests in equity markets in the US, and it invests in stocks of companies operating across diversified sectors. It also invests in dividend paying stocks and stocks that have a history of raising their dividends. Now DGRO was started in 2014. It's currently trading at around $52 per share, which makes it towards the higher end of the 52-week range. What's great about DGRO, just like SCHD, it doesn't only offer a nice starting dividend with massive dividend growth. As you see in the max chart, this ETF has also had some nice capital appreciation, and to be specific, the fund is trading at about double from where it started around 10 or so years ago. Now DGRO is of course very diversified, just like SCHD. The holding breakdowns are healthcare at 18%, financials at 18%, technology at 16%, industrials at 11%, consumer defensive at 10%, energy at 6%, utilities at 6%, consumer cyclical at 6%, basic material at 2%, and communication just over 1%. The top 10 holdings of DGRO are also very high quality. Companies like JP Morgan, Apple, Johnson & Johnson, Microsoft, ExxonMobil, abbvie, Chevron, Procter & Gamble, Home Depot, and Broadcom. Now what's great about DGRO is that it holds 432 different companies, making it over 4 times as diversified as that of SCHD. So for the investors out there that are maybe a little bit more worried, a little bit more conservative, and really don't want to have all their eggs in one basket, this is definitely an ETF to look into. Now another important aspect, of course, when it comes to DGRO is the dividend and the dividend growth. DGRO's trailing 12-month dividend yield is 2.35%, so making it just about 1% behind SCHD, but still a very decent starting dividend yield considering the trailing 12-month dividend growth rate is 17.53%. So the dividends have been getting much bigger over time, and especially over the last 12 months. The dividend growth on the 3 years at 7.82%, and on the 5 year at 10.64%. But like I said at the beginning of the video, I'm going to go through and show you exactly how any everyday investor that's willing to invest around $50 on a weekly basis over a long time period, whether they're invested in a high quality dividend growth ETF like SCHD or DGRO. Either way, over time, they can expect massive dividends in the future. So first off, for an investor, for example, starting with a $10,000 principal, invested into SCHD with $2,600 contributed per year, which is just $50 on a weekly basis. With dividend reinvestment turned on, an initial 3.49% dividend yield, which is around what SCHD is offering, an 8% annual dividend amount increase, a 4% annual share price appreciation, and 30 years invested. Let's see what we get. So this is with SCHD, remember. Right off the bat, this investor would receive around $353 per year in dividends. But your number 5, around $1,000 already per year in dividends. Now again, remember, a $10,000 starting balance and just $50 every single week into SCHD with the dividends reinvested. By year number 10, $50,000 already worth of SCHD with over $2,500 a year in dividends. By year number 15, this investor already almost has $100,000 invested into SCHD with over $5,600 per year in dividends. If we keep skipping down, you're going to see the numbers get bigger and bigger, faster and faster, because of the power of compounding is kicking in. $162,000 by year number 20. And this investor would almost be at the $1,000 a month by year number 25, $287,000 of SCHD and over $25,000 per year in dividends. At this point, this investor is making over $2,000 every single month in dividends, with once again a $10,000 initial principal and just $50 every single week invested. And by year number 30, this investor would have $527,000 in SCHD in theory, with over $57,000 per year in dividends paid. But wait, I also want to show you exactly how this would look with the same exact strategy invested into something like DGRO, which is $10,000 invested into DGRO, and again, $50 on a weekly basis consistently. Dividend reinvestment turned on, only a 2.36% initial starting dividend yield, because DGRO does have a little bit smaller dividend yield starting. DGRO does have some nice dividend growth though. Let's go with a 10%. Again, this could always change in the future. A 4% annual share price appreciation, and 30 years. Let's see what we get with DGRO. So for year number 1, DGRO is only going to offer around $238 in annual dividends. By year number 5, $721 in annual dividends. By year number 10, $1,927 per year. $10,000 per year, $25,000, $24,000 per year. So now we are past that $2,000 per month point. And by year number 30, DGRO in theory could earn this investor around $62,000 a year in dividends paid. So there we have it. There's 2 high quality dividend growth ETFs that every long-term investor should definitely look into. And also the exact math and a strategy on how any investor with a relatively small amount of money invested long-term can achieve multiple thousands of dollars per month paid in dividends as long as they stay invested long enough. But I want to hear what you guys think down below when it comes to SCHD and DGRO, both high quality dividend growth ETFs in my opinion. If you could only hold on to one for the rest of your life, which one would it be and why? If you enjoyed this video, make sure to please drop a like in it and subscribe for more content like this. Thanks for stopping by, guys, and I'll see you in the next one.